Recipes for technical trading success in Cook's Kitchen.
What's the secret of Chipotle's success? We're going to dive into some numbers here and my personal theory and let you know why you might want to still be a Chipotle investor. All right, let's take a look at the price chart here. This is today, July 23rd, and we're making new all-time highs. You can see we broke above this this resistance here in the 730 area from January. This is a weekly chart, by the way, a 2-year weekly chart, taking you all the way back to the summer of 2013 when the stock was trading 400 and broke above there strongly. I mean, just look at these moves. Pretty volatile. Was very volatile on the day of its earnings report. I don't know if you noticed. After hours after the report, the stock went from like 675 down to 620, just because the numbers were perceived as a miss. You know, maybe on the comps were missed street expectations. But the thing you have to remember about Chipotle is it has such a low float. There's only 31.5 million shares out there, so it's going to make these kind of swings. All right, so back to this weekly chart. We had a run up into earnings, as you can see. And then this strong move here, new all-time highs today of $734.50, and that's where we are now. So again, Chipotle, once the conference call got going, the stock started to slowly recover from that dip to 620, and then yesterday, obviously big surge, and today continuing that surge. So let's dive into what's going on with Chipotle. Record top and bottom, and this is comparing, this is quarter over quarter, or year over year, comparing Q2 to Q2 last year. Revenue up 14%, record $1.2 billion. Here was the issue. Comps came in at 4.3% growth, and the street was looking for something closer to 5.5%. So that was part of the disappointment. But we'll see how that picture changes in a minute here. Operating margin was 28%, which was an increase of 70 basis points. Obviously, the street like that. Net income, $140 million, works out to 27% earnings growth, $4.45 a share. It was a slight beat on the earnings number. Nothing to write home about, nothing to send the stock up $50, and yet here we are. They opened 48 new stores. Now, this was a big contributor to revenue growth, the new stores. So I said comps were 4.3% of the growth. Obviously, the new stores were almost 10%. Also, important to note, comps were driven by the price increase in the menu. So obviously, it stuck. And one thing you heard management say on the call when they were asked if they were going to do some kind of loyalty program, and they said no. It costs too much, and we don't need to. Our customers are loyal. We'll dive into that more coming up here. All right, so what is Chipotle Mexican Grill's secret sauce? And I suggest that trading at 42 times this year's earnings of about, just over 17 bucks, and 35 times 2016 consensus estimates, which are at about $20.50. CMG's special sauce, secret sauce, better be spectacular, right? Okay, so what is it? Is it the taste of the food? I think that matters, obviously. Is it the consistency? Hey, you want the same product every time, right? Is it the speed of the service? You go in, hey, they were created on a McDonald's model. That is the paradigm that has worked in fast food for the past 30, 40 years is, you have a system, move people in and out, you give them their food quickly. So that matters. Or is it for Chipotle, is it the healthy image, the quality of the food? Hey, we're no GMOs, we're getting better pork, it's the whole fresh idea. I think that matters to a lot of people. And then the cost. I mean, you can get in and out of there, you get a burrito for, $7, $8. That's important. Lastly is CMG success, management strategy, and execution of all this. You know what? I'm going to leave these in the order they're in and rank them this way and just say that, taste is most important, consistency, speed. the healthy issue, you know, that's kind of rolled into taste and consistency, I think. You know, it's part of that factor. It almost tastes better to people. Hey, if I'm eating healthier, you know, and there's no additives, no hormones, all that kind of stuff, people like that. That adds to their, you know, their experience of the quality and the taste. So let's move on. I have one more theory here, and it relates to the last point about management strategy and execution about what CMG does right. Now remember, I said we know that McDonald's owned them, probably wishes they still did, but who knows if Chipotle would be what it is if they were still under the McDonald's umbrella. The point is that Chipotle followed the successful paradigm, which, you know, having a system to, you know, deliver food to people quickly and make it consistent. And that's sort of the old paradigm. If you can't even do it at that level, you're not going to succeed in quick service. So I worked in restaurants for a few years, probably 12, 15 years, I forget now. Worked in all facets of the business. I started out, you know, I was a teenager, worked behind a bar, you know, getting ice, stocking beer, that kind of thing. Became a waiter in several restaurants, one high-end restaurant, managed a couple of small places. So I've had some broad experience in restaurants and before I got into markets. And one thing that I picked up on was that customer service often made the difference about whether people were going to come back or not. I didn't mention customer service on my list of what makes Chipotle, you know, a top play and a go-to place for lunch. By the way, you know, have you seen the lines? I tried to go there. I thought I was going to be smart the other day and go to Chipotle to get a burrito at 11 a.m. in Chicago, and there was already a line 15 deep. So that's why they need more stores to grow sales, because the huge demand is still there. All right, here's my customer service theory. I call it customer service IQ. And IQ stands for indifference quotient, because good service comes from staff not being indifferent to customers. Let me explain what I mean. So what's your customer service IQ? The indifference quotient. For staff to care about customers, they have to be working in a system that works, meaning everything has to be in place. Management has to have the store set up right, the food has to be fresh, it has to be stocked, everybody has to be doing their job, because if what staff needs to serve customers isn't there when they need it, then staff gets frustrated. And frustrated staff starts to care less about the customer experience and more about, let me just get through my shift. All right, obviously management must support staff so that they can handle the pressure. There's always pressure in restaurants at lunchtime or any time. Hey, you got to serve a lot of people quickly in a crunch time. That's how restaurants work. You move. We call it rush hour. And everything has to be there. You have to have management support for you to do your job. Stuff has to be there, and you can't be overwhelmed. You can't take on 50 customers by yourself. So I say that for staff to handle the pressure, you know, if they're overwhelmed, then customer service goes out the door. That's what I say here, out the door. And obviously the customers go out the door too, if the staff is overwhelmed and doesn't feel they have management support. So staff has to know that management has their back. And should work be fun? Hey, in restaurants, I think it should. And then this comes into good hiring. If you hire the right people, people that are, number one, friendly, can handle pressure, and then work as a team, you know, those are probably the big three that a good manager looks for, then they can do the rest. What I don't mention on here is that, so if management's doing all this to support staff, they've got a good system in place, and they make sure it works so that people can do their job and not feel frustrated or overwhelmed, then there has to be standards, too, of this is how we treat customers. So if management shows that they care in word and deed, then that filters down. The opposite, obviously, is that staff feel burdened. They can't handle the customer needs, quirks, and issues. By needs, quirks, and issues, I mean, you know, the person who stares at the menu and goes, Now, what do I get with that? And, oh, can I have, and they take a half hour to order and people are standing behind them. You have to have staff that know how to handle that kind of customer who's never been there, has complaints, has issues, needs an hour to put their order together. There are staff who know how to do that, how to, in a friendly way, help people find what they want and walk away with a good experience. All right, so that is my theory of customer service IQ. And it comes from my experience. I think if you go out to places like Chipotle and compare them to a Panera or a McDonald's, and notice what you see. Now, what else does this mean for Chipotle right now, given their earnings? Beyond my theory about customer service, I've got one note here from Baird. Following the Q2 report, they have no change in their positive thesis on Chipotle, and they moved their price target from $800 up to $850. That's how optimistic they are about the growth of Chipotle. Now, Chipotle is trying a couple different things in pizza. Whatever they do, I think whatever they touch will probably be golden, because management gets how to do quick service food, and they get the trends of the American consumer, moving healthy. So whatever they try and do is probably going to work, and building more stores is certainly along the right theme. I think that's all I wanted to talk about. So this is, I would say Chipotle is the new paradigm model for success in quick service. And so that's why you want to look to be an investor of Chipotle. Hey, maybe they're going to split this stock someday and give us some more shares. All right, I'm Kevin Cook. Thanks for watching The Kitchen.